Currently short in Bitcoin. Right now I'm approaching profit target or take profit here. I'll walk you through what I have trading top down here, starting on the 4-hour chart. So here on the 4-hour chart, you can see there's a high here, there's a low, there's a lower high, and putting in lower lows here. So we can see on the 4-hour, Bitcoin is selling off or in a downtrend. Here on the 1-hour, we can see that in more detail. Zoom out. This orange line is the divide of midnight New York time, which is how the algorithm differentiates day. And here we can see there's a level here where this is the London session from yesterday, and here being the New York AM session from yesterday. And then during the New York PM session here, price breaks through that level here, creating a market structure shift here on the 1-hour chart to the sell side. When that happens, price pulls back into this bearish fair value gap that's right there, or you can also call it a sell side imbalance, buy side inefficiency. So here in the Asian session, price pulls back into that bearish fair value gap, and then price delivers here to the sell side, putting in additional bearish fair value gaps here that are in correlation with the price action from this area here. And then price pulls back into this fair value gap here, this bearish fair value gap, and then is now delivering to the sell side in this current price leg here. Price is now coming to the end of the New York AM session. Currently it is the lunch hour. There's approximately 9 or 10 minutes left until the New York PM session opens. I'll be looking for potential trades during the New York PM kill zone. Right now, I would anticipate that price would likely, between now and the 1 p.m. New York time, would likely reach my take profit. So I would anticipate to have taken profit before reaching the New York PM kill zone at this time, based on current price action. So we can see on the 5-minute chart, there's an entry and an exit here. I took a loss here earlier in the day. So I took 2 trades during the AM session. We'll zoom in here. As price is pulling back and get a look at my first position. So price comes in. There's liquidity resting here. Price comes in at the open of the kill zone and sweeps that liquidity out of the market, and then trades and closes below this opposing swing low here. This also puts in a bearish fair value gap or sell side imbalance, buy side inefficiency, showing there is volume behind the price move. So with that, I took an entry here on this pullback. Price traded back down to my area of interest here, and then price delivered here to the buy side, and I was stopped out here in this candle as there's liquidity here. So I was a part of this liquidity here that was swept out of the market. So this was my first position. And then price redelivered to the sell side, puts in another bearish fair value gap here. I was able to take an entry as price pulled back here. Price redelivered to the sell side, pulls back again. And now you can see price delivering here to the sell side, here at this level, putting in a market structure shift here to the sell side. And now you can see there's a high here, there's a low, there's a higher high, and now putting in a lower low. So you can see the price action here. Bring your attention back over to the 4-hour chart. Take profit is at 89,354. This level is in an area where there are near equal lows. So there's quite a bit of liquidity. There's going to be a liquidity pool down here. There's a liquidity pool down here. So my take profit is in this area where I would anticipate the algorithm to deliver price to reach this area where there's going to be sell orders or sell stops for anyone who's gone long. So there's going to be sell side liquidity resting right down here in this area. And I want to raid that area of liquidity with the price delivery algorithm. We'll see if we can get some continuation. You can see prices pulling back now after testing these lower levels. You can see in the previous 5-minute candle, 89,390. This one, 89,353. Wait a minute, did I get skipped? I think I may have gotten skipped in this. Yeah, this is 89,353.8. Oh, okay, that's where price got to. But I need the ask. I need the offer to reach that level. So price actually reached that level, but with the spread, I haven't been able to cover my short yet. So right now, I will be looking for price to continue here to the sell side, if possible, for continuation of this sell side delivery into my take profit. We'll see if price will redeliver here to the sell side so that I can take profit if the ask or offer, depending on how you recognize that level, reaches my take profit level, as the bid has already reached that level. Just based on the difference of the bid-ask spread, I'm going to need price to go a little lower in order to be able to cover. This trade is a 2-to-1 risk to reward trade. Has consolidated right here in this area, this 89,620 area. A little over 3 minutes remaining here in the New York AM session, and then the New York PM session will begin. I would anticipate when the PM session begins, if price is going to return to the sell side, I would anticipate it does so then. Price could deliver to the sell side as just a continuation from this area, just in any further or any later candle, or price could pull back into any number of these newly made sell side imbalance, buy side inefficiencies, or bearish fair value gaps. Could pull back into any of these to collect orders before returning to the sell side. It could also just deliver to the buy side and stop me out potentially. But very close to take profit within 70 cents of being able, or within $70 of being able to take profit at the lowest price point. Price has now pulled back into this first bearish fair value gap here, and we'll see how price responds to this fair value gap here. So here's the sell side imbalance, buy side inefficiency, or the bearish fair value gap. This is where price has just traded into it. And we'll see if price wants to continue and maybe close above it, potentially close inside of it, or if price trades lower since trading into it. So we'll watch this for reaction. The best reaction would be if the body of this 5-minute candle closes below this level. And then we would just wait for the next candle to display what price action may be willing to do next. This is the 5-minute chart, so it is not as strong as a higher time frame, which would allow for greater, I would say I would have or the higher the time frame, the stronger the indication or the signal. So here on the 5-minute, I like to use the 5-minute because the 5-minute, I find that I read price action much better on the 5-minute chart. But when it comes to structure, I do not use the 5-minute chart for structure. At a minimum, the 15-minute chart, but I prefer the 60-minute chart. But for price action, the 5-minute chart works best for me. I also find it best at using multiple charts. Early in my career, I struggled with using multiple charts, but now I find that it's necessary for the way that I trade because I get different information from different charts. But too many charts can paralyze you, and not enough charts could leave you blind. So depending on how your trading system functions, you'll have a better idea of what you'll need to do. And now we can see the body of this 5-minute candle did close below this fair value gap here, and now we're seeing the next candle here trade into the same fair value gap, so it's being retested. So to me, this is an indication that this fair value gap may fail because price is still trading into it after closing below it. But price could do one of the same three things as I mentioned before: trade above it and close. It could trade inside of it and close inside of it, or it could just create a wick and then trade back lower below the threshold here of the fair value gap. So what I'm doing now is just waiting for a price to deliver, and then I will get the information after the candle closes, and then wait for the next candle. price still trading within this first bearish fair value gap here. But this is also can be pretty typical price action when there's when you get very close to a profit target and price turns around just before. Typically that would indicate, at least for my style of trading, that price is likely to deliver at least one leg lower than my initial target or initial let's say profit area. It's likely going to move into the next level profit. Here on the 1 hour chart, there's been a break of structure here with the close of the New York AM session. This last candle here has just put in a body candle close here. So to me, I would anticipate further delivery to the sell side based on the 60-minute candle. Right now, it depends on how price wants to respond, but if price wants to pull back to this level here, which is 89,950.2, then I would anticipate price would continue delivering to the sell side to that next level. Price here could also consolidate, but I doubt if price would consolidate for the next hour. But if price did consolidate for the next hour, then this would create a fair value gap in this area here. And then I would anticipate during the New York PM kill zone for price to pull back into this gap and then either deliver to the sell side from this bearish fair value gap, or disrespect the gap, close above it or within it, and then deliver back to the buy side here. But I'm anticipating price would likely deliver to the sell side to take profit, leaving the gap in place for later. I don't anticipate price to come back and close the gap, even though it could. And this may be just my bias for getting the target, but as looking at current price action, I would say that that would be more likely than not, or I would say more probable than not, or a higher probability. But we will see here as price has now in the previous 5-minute candle closed within this fair value gap here. So this increases the probability of this fair value gap failing and price reaching into this second bearish fair value gap here. And there is a lower probability that this candle here would close below this candle, allowing price to continue here to the sell side. I'm going to let price do its thing here, and if all goes well, I'll get to take profit here before the New York PM kill zone. If not, then I would anticipate price to reach into that area during the New York PM kill zone, potentially as an area of liquidity to buy, to return to the buy side into this potential fair value gap if it is there. But many different things could happen in in this situation, but we'll just have to let price play out here. But if you'd like to know more, visit us at OnTiltTrading.com. Trade safe, trade together.